So in first video we spoke about how to take an entry, right? Now there were some cases when the market will not, come back and gives twice, two times breakout. We are entering on double breakout strategy, right? Now sometime double breakout will not occur, but how to understand? At what are the situations when chances are market will not give double breakout, it will flow in one direction. Even it will not give, one, two. We are thinking about two breakouts. It will not give, one breakout. It will directly break, and go in one direction. So when to use that situation? When that situations come. For example, the market is, let's talk about a bearish situation. Opposite will be for bullish. Let's see the market is, let's say, going down, and you will feel, means you will see a situation when the market is going down and making a kind of flag formation, right? It could be a clear flag, or it could be, a little bit of sale, and market is running on a trend line. Mostly 99% it will be a flag pattern, right? So market is, before you are going to get a signal. Let's say before getting the signal, market itself made a flag and then given a breakdown, and after some time you got a sale signal. Since whenever the flag kind of formation occur, this time when the market gives a breakdown, let's say here is the calling candle, somewhere is the calling candle you got, market will not come back and again give a break. Means let's say it came back, and second time when it break, you will enter. This kind of situation will not occur if it is a kind of flag formation. Okay, either before your breakdown, let's say before your calling candle, before the signal generated, flag was already there, bearish flag was there, let's say, then it will not come back. Let's say here you mark the high of the candle, right? Again when it will re-break, like here somewhere with a small stop loss when we are entering, you might not get this opportunity when there is a flag kind of formation in the picture. Okay, so this is one case. You should not, you will not get an entry. So here you need to decide, oh, market structure is kind making a bearish flag, probably it will not come back, so you might take an advance entry. Okay, in this case you don't need to wait for double breakout, which we are following as in strategy. Okay. Okay, one more situation. When the market, you see, had an important top over here, and it's respecting this top, but slowly, means there was a top, and what you will see, the market is, moving on a trend line near that top, kind of, this is a ascending triangle pattern. Okay, so what market is doing, market is moving on a trend line, kind of forming an ascending triangle, and then it gives a breakout. There also sometime you will see, like this is also a pattern, you will see the market will not come back inside and give a breakout. Sometime it will happen, but majority of the time you will see it will go one way. So if you are seeing the market is, kind of making ascending triangle, going slowly up, and let's say somewhere here you got a buy signal. So here when you are getting a buy signal, you draw a horizontal line, then there are chances market when they give breakout from the, calling candle high, it will not come back and retest. So there also you will not get an opportunity. Okay, so just keep this picture in mind. Whenever you are getting ascending triangle kind of pattern, double breakout you might not get, you have to enter on one breakout itself. Okay, one second. Okay, also before your breakout, or before your signal, if you see, or even after your signal, if you see some sort of triangle is being formed, let me this, some sort of triangle is being formed, market is, making some sort of, symmetrical triangle. This is also a situation you will see the market which goes one way. Okay, so in ascending triangle, in symmetrical triangle, if you see while your signal generator, or before the signal generated, okay, or even after the signal got generated, you will see these two patterns. Okay, you will see that, then probably the market will not give you a second breakout scheme which we have. Okay, so here what happens, it gives a breakout. Let's say this is the calling candle somewhere, and here you are already seeing there is a kind of symmetrical triangle is being formed, and it gives a breakout. What is our strategy? First breakout, don't enter. Come back and second time breakout, then enter. But it will not happen if there is a symmetrical triangle. Okay, whatever I am teaching, only focus on that. And there will be one ascending triangle. Already I taught all of you guys, even in the class itself, what is ascending triangle, what is symmetrical triangle, how to trade. Okay, so this is nothing new for all of you. Okay, okay. So these are the four formations. One is ascending triangle, one is triangle. This is the major rule which you have to follow, and flag, bearish flag. Now let's come back to other situations. Here is the same situation like that. You got a buy signal, and let's say you marked an horizontal line on the calling candle, let's say here, like that, something. Then what you have seen, the market, given first breakout at here. You see, here is the first breakout. Came back and again going to give a second breakout. Okay, you enter on the second breakout. This was your stop loss. Again, it came down probably, or you may got a stop out, or you might not. Let's say you got a stop out. Then third time again it's giving breakout. Don't enter. Don't enter. See if there is a ascending, means if there is a symmetrical triangle or some triangle formation is being happened or not, because in triangle formation such kind of stop loss generally goes. If you see there is a kind of triangle formations, where the horizontal line you mark that area, then wait for a breakout and then you enter. Okay, I hope this point is also clear to you. Okay, now coming back to other case, you will see market will fall 90-degree, fallen 90-degree. Keep in mind, it's not like this kind of fall. It's like this 90-degree, 2 3 candle, it's reached to a big destination, and then you got a sale signal, right? So what you will do, let's say on this candle you will get a sale signal, and before this there was a 90-degree fall. You marked, 1 second, yeah, you marked low of this candle. So what is our strategy? First, after some time it will give first breakdown, don't enter. Then it will go back and again give a second breakdown, enter, right? So it will not going to occur. It will not going to occur. In such case, what you will see, if there is a 90-degree fall, let's say after some time, this is your calling candle, and let's say it's given a breakdown, and you see it came back on the same line, that horizontal line, where you can again mark it like a flag and pole structure, and again it's giving a breakdown of this flag and pole, you can again re-enter on same. 1 second, yeah, okay. So if you are seeing, let's say this is your calling candle, for example, here you got a sale call, here you got a sale call, and what you did, you simply mark the calling candle low, right? Then what market did, market from here again made one more candle, went up, okay, up, then again given a breakdown from this first breakdown. What you are doing, on the first breakdown you will not enter, right? This is your plan. You always wait for market to come back inside this horizontal line and give a re-breakout second time, then you will enter. But this time, when you see it again came back to your horizontal line, but it's not going above this horizontal line, rather it started again going back, and you are able to see this is kind of a flag and pole formation, then don't wait for it should go inside then give a second breakout. You can assume on the line itself this is a second breakout, because the second breakout rule is to make your stop loss small. If you see here on the flag and pole formation, this stop loss is already very small compared to that big move which is going to come. So you can enter in such flag and pole. So this is an exception. As I'm saying, flag and pole and triangles are exception. Here you see. 1 second. Okay, here you see. Again again let's say you got a sale signal somewhere here, you marked it. Market again fallen from here, 90-degree fall. and again it came back, but this time again it's not going up and giving a second breakout. Means what is your strategy here? If you are is your calling candle, when the first breakdown happens, we will not enter. Second breakdown, what is the strategy? It should go above the line and again it will give a second breakdown. But sometime it will happen, the market will not go above the line, especially for the 90-degree falls. Okay, what it did, it went here and again you will see some sort of engulfing pattern formed here, some sort of swing. You will get a understanding, okay, this must be a swing. Okay, could be acting as a stop loss, then you can re-enter here itself and it will give you the big move. Always keep in mind. So these are two exceptional cases. Let me delete this let me delete this let me delete this Okay, now let's talk about when on the first, by seeing the candlestick itself, you will understand this opportunity is a not a good opportunity. Okay, so here you see, whenever you are getting a buy call, for example, and next candle is a shooting star candle, then this itself is more explanatory. This is not a good signal. Maybe on second breakout it will be a good signal, but at least this is not a good signal. So this ignore this opportunity. These are risky opportunities, right? I had noticed, I had tested it multiple times. Second, you are getting a candle call selling candle. Let's say you're getting a sale call on a candle, but the problem is this candle is having a very big rejection. It's look like some sort of black hammer. This is also not a good opportunity. If you try to short such opportunity, mostly this kind of candle whenever occur, market will go up from here. You get a sale, obviously you are waiting for two times breakout, so you might not get an entry, but mostly I had noticed in such kind of candles, market, obviously you will not get an entry, but it shows a reversal from here. Even here you will see in such kind of situations, when you get a buy on a candle, next is a shooting star, it will fall. Maybe it will again go back on a second breakout, but who knows second breakout will occur or not. But at least for some time it falls. Okay, and sometimes we can use it as a reversal opportunity, even there is a buy call. Okay, and third opportunity, there is a very big candle before, means there is already a big move, then the selling is coming. So this is also an indication the market will not go. This is also an indication market will not. Okay, so you can see that whenever you will see there is already a big move occurred in the past, then you are getting, just recently three, four big fall, extreme powerful selling candle, formed, then you are getting a sale signal. This probably would be a risky, mostly you will see this is an inside bar. It will generally go up. Okay, so just three candlestick patterns whenever you are seeing, just try to ignore, think out of the box, otherwise you will easily get trapped. Okay, okay, 1 second. Okay guys, so I would be explaining you some examples over here so you will able to understand it. 1 second. Yeah, so here you see, let's try to test anything. Let's test on silver. I'm going back, and I will show you almost 1 year of back testing from here onwards. Okay, now you see this is November almost. I'm just going to show you the back test. See, for example, here you got a sale call. This place, let me mark this horizontal line. Like, yep, this is a calling candle. Now you see, before this calling candle, what are the situations? Here the market, market is coming 90-degree fall. You are waiting for your second breakout. It not even given you opportunity of first breakout. Sale call and immediately boom, boom, fall. This kind of situation happened. 1 second. Yep. So you see here you did not get any opportunities. But if you observe, for example, this is like a flag and pole structure. This is like a flag and pole structure, right? That structure which I had shown you. See, okay. before this move, and you see, boom, you didn't get a call. So here you might not get even one breakout. We are talking about two breakouts. So here, as soon as you get a call and you are seeing the market is moving, you might take an entry. Obviously, the quantity would be less when there is no double breakout confirmation, but at least you will not miss the move. Otherwise, if you wait for a double breakout, this move is gone. Let's talk about this buy call. This is a candle, calling candle. This one is the calling candle. We got a buy call. What we have to do, market, this is first breakout occurred here. This is a first breakout. Again, the market going back and giving the second breakout. Here we will take an entry, and this will be your stop loss. Okay. And what happened after we take an entry, market almost moved in the same range, came back and hit our stop loss. That's completely fine, because whatever is there, I'm showing you live, right? When there is a stop loss, when there is no, I'm not saying, oh, here I can put this stop loss. No, this is not like that. I'm not going to make, uh f- like forcefully the things. Okay, whatever is there. Okay, so here you get a buy signal, and this is the first breakout from the level. Okay, here, this almost on this candle you got an buy call. This is the first breakout. This will be your stop loss when there is a second breakout, because who knows, it will come like this, right? And it came, it given your stop loss. You might save yourself from this stop loss only if you have some sort of buffer. Then you had saved yourself. Now, again, now this is a third breakout. One second. Yeah. Now again, market is going up and again giving a breakout. Okay. Until there is no opposite call, you can again re-enter. And again, this will be your stop loss this time. And you see, on third time, it given a wonderful move. So sometime, like 10% of the time, you will see, even on the second time, you will get a stop loss due to some fractions, 10 point, 15 point buffer. You have to lose one stop loss. But no doubt, when the next signal will come, it will give you this kind of big move, right? Okay. Now, coming to this, coming back to this. Okay, this candle. Now you see here what happened. This is the calling candle. Market, which is the calling candle? Let me just highlight once again. Okay, this is the calling candle. This is a calling candle. Market given a breakdown, number one breakdown, came back, second breakdown. As soon as second breakdown occur, this will be my stop loss, because if I enter on first breakdown, my stop loss will be bigger. And you see that, you see the move. This is powerful move. 2000 point. 2000 is big. It's very big move. Okay. Even more further it fallen. Anyway, here you see, remove the drawings. Uh, this candle, this is my calling candle. Okay. And you see that, yes, this is my calling candle. And what happened, market given a breakout. See, this is a calling candle. This is not considered as a breakout. It was just rotating on the horizontal line. This is a fresh breakout. Market came back and I'm waiting for my second breakout, but this second breakout never occurred, I think so. Yep. Here here it occurred. This is my second breakout. So this swing will be my stop loss. This swing will be my stop loss, because this looks as a swing. This is just a pullback. Okay, this looks a better swing than this. Even you can put this, but this looks a better stop loss to me, because there is no much difference. So I will choose this one. Let's see what happened next. The market went, and almost some sort of profit we got. Let me again mark all of them once again. So here we entered. Here, Somewhere here will be my stop loss. Oh, here will be my stop loss. Here is my entry. And how much I got? Almost 1000 point, near 1000 point is my stop loss. So 1 is to 1 I easily got. Then the market started coming back. So if you are seeing the market is, going back in your direction, you may exit on market price or you trail your SL cost to cost depending upon, type of trader. Um, here, here you this. See, this is a morning star. Whenever you see you got, see, this is when I will enter on second breakout. But just for your kind information, this pattern is morning star pattern, right? So whenever the morning star pattern occur on a calling candle, means on the calling candle combining one to, neighbor candles, you will see the morning star pattern. You will see this kind of opposite move in the market. Okay, so just keep this in mind. So again, what we will do, we will enter when second breakdown. Here is the first breakdown. Market went up. We will wait. We will wait, and boom, second breakdown. Here, where is our stop loss? This will be our stop loss because there is no other way we can, trail our SL. Because reason is here, if you take an entry somewhere here, this stop loss at least better than, because we are entering on second time so that we get a small stop loss. But what we can do if there is no small stop loss, right? Nothing we can do, right? And you see the market moved down almost from here to here, almost 1300 point, right? Means I'm not talking about the point, I'm just telling you, how to take an entry. See this one, this is my calling candle, and somewhere here, this area is having my calling candle. So you have to see, let's say this is also first breakout, not a proper one. And if you consider this as a breakout, you will get entry somewhere here. If you don't consider this as a breakout, you think no, this is not a breakout, this simply went and came back, it's okay, it's fine. Also I told you, I will just show you here. Also I told you here, when you see this kind of patterns, even before signals, then you get ready, and after signals, then while re-entry you can plan. So here you see we got kind of triangle pattern, right? Here you see. So as I told, here is a, let's say this you considered as your calling candle. This is your first breakout. Let's say you are not even considering it as a first breakout. If you not consider as a first breakout, you will see, if you consider this as a first breakout, it will never come back. As I told, whenever triangles are there, it will never come back. So you have to decide on runtime. Since it's a triangle, it's not going to come back. So I might take an entry by putting this stop loss. There is no other way. Okay, this is how you have to plan. If you consider this as a first breakout, then this would be your second breakout and you can happily enter. So this trade was bit confusion. Some trader will find it as a first breakout, some trader will think this is a second breakout. But out of both situations, you have to think this is also a triangle, because already a buy signal is generated. Since already on buy signal is running, then you are making a triangle and breaking your, calling candle level. So it might not come back. And see what happened. One second. Oops. See, boom, it never came back, right? And when it came back, it's already in another, sailing call. So that's what my point is. If you are seeing triangle, you should not think of second breakout that time. You can re-enter, you can enter faster there. Okay, let's talk about this trade. This candle is given call. See, this candle is given a call. As I told you, this pattern, when you see very big move, see this is a big move, right? Gap down plus this much big move, mostly. And then Okay, it's not that use case. Why? Because it's coming on that big move. If it is coming after the big move, mostly it will go for reversal like this. If it coming on this candle, then you will see it will go like this. This is, just an observation. Okay. So here you see this is a calling candle. This is my calling candle. This is my first breakdown. This will be my SL for my second breakdown. This is my second breakdown. And boom, you see, may remove, and you see that move. Obviously a good move. Okay, this video is getting bit bigger. This is my calling candle. Okay, this is my calling candle. This is my first breakout. Market came back, okay, from here and given a breakout here. Again, while breaking out, this is a shooting star. As I told, when you are entering, right, if because you are entering on this candle, right, let's say it's giving a breakout and next candle is shooting star, it's like same situation. So it's obviously will come down, but it's okay. Let's assume the worst case you entered on this was your stop loss, hunted, no problem. Again again new breakout occur at this time, third breakout, and you enter. This was your stop loss, and you see the market given you the reward. It was it was good risk reward. 1:3. Okay, so this is the advantage, right? If you initially you are taking entry here, this was your stop loss, you are getting target, but this not you think is a very big stop loss, right? Okay, another move. Okay, here here you got another move. Now this was what I was talking about, this use case. Already a big move occurred, then you are getting a call somewhere here. Which candle? This candle. On this candle you are getting a call somewhere here. So since already a move occurred, then you are getting a call, it's better to ignore these opportunities, because these opportunities anyway will not give you more profits. But let's stick to our plan. So this is what given, I given you exception. This is a first breakdown. See market, this is the level, first breakdown here. We are waiting for market to come back and give the second breakdown. There is no second breakdown, there is no closing. So we didn't got an entry. So good for us. So in these situations, mostly you will see there will be some sort of trend line, it will give break and it will go up. Okay, okay, so that's why I told you you can ignore these three situations only. Okay, now this situation, one I am just testing you in front of you, all processes same. Here you see, this is your calling candle, this is your first breakout. Okay, here we will not take entry. Why? Because this stop loss will be big. Came back and boom, second, this will be my stop loss, and this is my second breakout entry. What happened? It came and hit my stop loss. Fine, I will give a small loss. Then again market went and given the third breakout, and this swing will be my stop loss, third stop loss. And see, boom, very big profit, right? So that's what my point is. Nobody knows how long it will go, but at least we should know where we should exit our trades. Okay, um here is one more trade. Here, Okay, this one. This is my calling candle. Now you see, already you see there is a kind of move occurred already. Anyway, after this move, oops, after this move, right? I am feeling it's like a flag and pole kind of structure. Either here you will get that feeling, or here you will get that feeling. One second. One second. Okay. So almost same situations which occurred earlier also. So we expect, should not wait in such cases. You should, not wait for second breakout and see what happened. So here is my calling candle somewhere. Okay, this one was my calling candle. So as soon as it gives breakdown, this one my breakdown, I will take an entry. Right. So here is the entry and this will be my stop loss. See, and next day I was stopped out and market, went up, almost up, sideways up. So if market is not good, you know, you might, not get profit. So here, this was my stop loss. That's fine. Okay, I given the stop loss. Though the market went down again. See, I will show you. Here I took an entry. This was in stop loss. Again, it given a breakdown at this place. This will be a stop loss. You want, you can take an entry, and this was again one more stop. Okay, this case. Then here, then here. Here again a breakdown. This will be your stop loss, and you see this time you got a reward, right? So you have to blindly follow the rules, right? You don't need to use your brain, otherwise emotions will come into the picture. And once you, let's say, I will tell you here while taking an entry, next day was a gap up day, right? This was a gap up day. If this must, you didn't got stop out for normal move, you got stop out for a gap up move. If gap up is occurring means next day market might go up. Okay, and you see when this time second opportunity you are saying, I am going to add one more point. Here you got a call. Here you got a call. Then after your call, market given a first time breakdown and went up. For example, let's say it given a breakdown then went up. Okay, you are, if you are following your two breakout rule, then this will not be an entry. But one point I want to highlight, when the market is going to give you the breakdown and again going up, and second time when it's giving a breakdown, you enter here. No problem, you enter here. On second breakdown you can happily enter, right? If you consider this as a first breakdown and this as a second breakdown, you enter here, but enter with low quantity. Why? Because while second breakdown, whenever the second breakout or breakdown is occurring, check out the lowest or highest point before that. So this was the lowest swing made. So until the market will not break this swing, you can't go aggressive, because it might be a possibility you entered and it made a double top and boom. And exactly same happened here. Similarly, let's say here is your calling candle in the buy trade. It went up, made a high and came back. Again, it's giving second time breakout from the level. You can buy as our rules, but until this high is not broken, you are still having a risk. Why? Because anytime it will make double top and it will fall. So you can add more quantity as soon as it will break, but until add a small quantity, because it's a riskier trade. Exactly same happened here. You entered and you got stopped out. And third time, you see, third time, what is the difference? When you enter on the third trade, it given a breakdown. This was your stop loss, but this time it also given breakdown of this, all the swings, recent lows, all the recent lower, these were the lowest lows, right? Recent one, those all got broken. And you see the move was very aggressive. After that 90-degree fall, you have to use your price action knowledge as well, then you will take most out of it. You have to think, Here you see, if you don't think also, you will get a small SL. No, it's fine, but when you think more, you can save yourself a lot. So this is a calling candle. Here the market, given a first breakout, let's say this, you can consider as a first breakout, then came back and boom, second breakout, and the market went up. Okay, but again, this could be a conflict. That's why I'm taking all the cases to make you explain. This could be a conflict. Some persons will say, no sir, I will not consider this as a breakout, I will consider this as a first breakout. This will not be my breakout, not look like a breakout for me, rather this look like a breakout for me, so this looks a first breakout to me. So I am waiting for again come back and for second breakout. Now let me tell you one point here. Okay, you could be right, but as I say, whenever you see some sort of ascending triangle formations, and when it's giving, here you got a buy call, and after a buy call, a ascending triangle is giving a breakout. Chances are very low the market will come back in those situations. What you will see in those situations where the market will go up. That's why I highlighted in the beginning. When you see ascending triangle breakout or a symmetrical triangle breakout, chances are very high market will not give you the second breakout. Okay, okay, now here, this candle, this candle, yeah, this candle you got a trade. Here what happened, you got trade on this candle. Okay, market given, after this given a breakdown, came back, kind of retested here, and again it's going, you may take an entry on this also. Okay, because you can consider this like this, as I told, this case, this case. See, there was a 90-degree fall, then it came and retest on the line itself. So there was a, or this one, there was a 90-degree fall after this. No, after this there is no. Before there is a 90-degree. So when there is a before 90-degree, it should create some trend line. So it's not creating any trend line. It's simple. It's simply coming. It's simply coming. But this will fit in our use case. This 90-degree fall, then it's coming on the trend line. Okay, and then it's giving a breakdown. Okay, this one. But anyway, with our rule, if you want to take an entry, the basic rule, these are the additional things above the basic rule. But because you have to feel there is a flag and pole formation, then the market will show the move. But the basic thing itself is, giving you an entry. If you know the advanced things, then there will be obviously more advantage you will take. But if you don't know advanced thing, you need to practice. Then even our basic moves will give you the entry. So here you got a sale call, and now try to understand what happened. Market came back. See, first breakdown occurred here, went up. This will be a stop loss. Second breakdown occurred here, and I got stopped out. Then again given a breakdown, this will be my stop loss, and here is my entry. And you see on the third, even you consider with the worst situations, you see the move. See, can you see that? See that? See that? Continuously up to here. Okay. Now video is getting bigger. You see there. What happened here? First breakout. I will wait. Came back. Stop loss. Second breakout. I can easily get 1:2, no doubt. You can see that. See, I can easily get 1:2.41. I can see with the picture itself. This much is stop loss, this much is reward. But again, came back. If you not let's say you trail cost to cost, then you might exit from this trade. And then the boom, third breakout. This will be your stop loss, and again you will easily get 1 is to 2, 1 is to 3 here in this trade, right? Again it's going to give you fourth breakout. Right here you see this is a fourth breakout, and this will be your stop loss, and this will be your fourth breakout, and boom, you see there is a reward. There is a reward, good reward. But I will recommend, don't try to go above 3 from one level, because three levels are more than enough. Three times entry is more than enough for one trade. But even on fourth trade we got, but ideally you will not get four time. Three time is the maximum time you will get an entry. Maximum majority of the time you will get one time entry. Three times sometime you will get, but four times if you are getting an entry, that's not good. And also this indicating a sideways market. Okay, and now here you see this is my calling candle, and as you have to give a wait for a breakout. Obviously you didn't get entry here, but what I was trying to say, see, there is a trend line, there is a W formation. Okay, there is a W formation, and uh, whenever any, like the market is not going to give entry, rather is going to reverse back, you will see there clearly the market is, like moving down, 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 made W and give a breakout. So obviously you didn't get an entry here. Why? Because there is no even single breakdown. We wait for two times, so no entry in this case. But you can plan reversal. Here is the calling candle. This is the calling candle. So this is my first breakout. I am waiting for my second breakout. No second breakout. Um, yep. Here you see. There we got a sale call, breakdown, first breakdown, came back, boom, second breakdown. Now, why you should ignore this breakdown? Even you can enter, that was in stop loss, that's fine. But why you should ignore? While you are getting an entry, here you see that this candle, this is a black hammer. So while you are getting an entry, while you enter on any trade, and you see either hammer like this shooting star or a black hammer, then chances are this is in sale trade, this is in buy trade, then market is going to go reversal, going to show a reversal to you. Okay, so here, right, this candle you got stopped out, no problem. Here is my third breakdown. You can consider this will be a stop loss, or this one you can consider this will be a stop loss. This time you got some move, you see you got some move. Okay, so rule is fixed that this is the major rule. Okay, 99%, 95% this rule will be applicable. These are the some variation in the rule which will give you some hints where the rule, need some modification. You see that it went up several times, but you see the moves. Now here, inside a big candle, if you are getting a call like an inside candle, you are getting a call, that is not a good call. Like here you are getting a good candle which is inside of this big candle, right? Already a big move occurred. So this could not act, though there was some move, but majority of time this moves is not good. It will came down, right? Anyway, these are just to make you warn. Okay, you may ignore this, but still you are entering, you should try to follow our rules. This is a first breakout, came back, created one stop loss for us, and second breakout. Here you will take an entry, and you see that move. That is big one for this stop loss. What is the risk reward? I don't need to explain, you can feel yourself. This was my risk. and it went up to here, 1 is to 10, above than that, 1 is to 11.9, almost 1 is to 12, right? And here is one more trade, sale call on this candle we got. Now, yep. So here is the calling candle, given a breakdown first, came back, created one stop loss, and again gives a breakdown at this candle. Second breakdown, this will be our entry and this will be our stop loss, and we will wait. And you see, we got a good move. No doubt, we got a very good move from here, right? Also, you see that whenever you are seeing any kind of flag and pole kind of formation, you even later on you can add more quantities. Don't miss such flag and pole, bearish flags. Okay, see here one, this candle, this this is the candle. We got a entry, first breakout, came back, okay, and you can consider this as a second breakout. So you, this was a stop loss, small stop loss, like here was in stop loss on second breakout. Again it went, given a third breakout, this will be a stop loss, and you got stopped out here itself. Okay, so that's okay. Giving this small losses is fine, because some big move will come, you will capture that. You can't save yourself from stop loss. If you are thinking you can save yourself from a stop loss, and you can find a system which will always give you a winning accuracy, believe me, one day you will find that you will get 3 4 consecutive wins, big profits, and one day you will wipe out. It will happen. So better not fall into such situations. Be very specific, very tight, and very consistent with your system. Follow it properly. Sometimes system will give you losses, but you have to think, the drawdown is very less in the system. Now here you got a sale trade, okay, in this big candle. So again, same rules. See, we got three small stop loss, that's fine. Okay, so this is my first breakout, came back, and here is somewhere my second breakout. And as per this breakout, this is a swing for me. And what I have to say, you see that, you see this move. If you enter somewhere here and this was your stop loss, again 1 is to 4. I don't need 1 is to 4. 1 is to 2 is enough. 1 is to 2, 1 is to 3, between 1 is to 2 and 1 is to 3, like 1, 2.5 is enough. Okay, now again, here is a calling candle. Same rules. Here is my calling candle. Okay, is given a first breakout, fine, came back, given second breakout, okay, you can enter, boom, stop loss. Third breakout, and this swing will be my stop loss, we entered, even, or this swing, whatever you see at that time we entered. And you see that, boom, big move. That was a mega move. Also, one important thing to highlight, also this look like this same pattern which I was talking about, our ascending triangle pattern. Like there are tops, there are one top, second top, and here you got a call. So when on ascending triangle you are getting call, whatever is the nearest stop loss, just take it and enter. Why? Because this kind of move, see here it came back for a pullback. Ascending triangle mostly not comes for pullback. It will simply goes like a rocket. Okay. So even we use our double breakout strategy, we enter in the game. But since an ascending triangle, as I told, and the symmetrical triangle, you have to put some exceptions. Okay. Okay, video is getting longer. It's 90 minutes, 49 minutes almost. Okay, okay, this is the candle. This is the calling candle. Now let's try to understand here. Came back, first breakdown, made a stop loss for us, and boom, second breakdown. Also, if you see a bearish flag, I hope you are able to see, then you can go aggressive in such trades, right? And easy move, very, very easy move. Though it again came back, you obviously you have to book some profits, and if you're not booking, you may exit cost to cost. But whenever you are getting some risk reward, I don't know the reason why you will not book. If you enter here somewhere here, and if this was your stop loss, and you are getting almost 1 is to 1, 1.29 means 1 is to 1, then definitely you have to book some or exit at cost to cost. No need to put, losses in such trade. Whenever you achieve 1 is to 1, never do any kind of losses. Not, don't give anything to the market. This candle is the calling candle. This candle is the calling candle, and our rules. Okay, calling candle, first time breakout, one time breakout, came back, second time breakout, enter. Now again there will be contradiction. Some people say, sir, this is not a breakout, this is my first breakout, and second breakout obviously didn't came. Okay, fine, you depends on people to people how they are seeing the situation, but you also have to see this situation, which is ascending triangle situation, where there is a top, there is a second top, and this both tops can act as a selling point, but it didn't. This top got broken by this candle, so chances are very high ascending triangle will not come back, so you need to take an entry even it's a first, second, or zero breakout. If you have a valid buy signal, enter, because ascending triangles and symmetrical triangles might not give an entry again. Okay, you see that big move. Okay, you must be thinking, sir, you are just showing me this one. I'm showing one particular trade, like silver. Why? Because I just pick one and shown you 1 year data, because rule will be same everywhere. Now I will show you in some other also quickly, like Jasmine. You see this recent trade I am showing you. This is my calling candle. Where is that? Yeah, this is my calling candle. Should I enter here? No. Wait. This is, or which one is my call? Yeah, this is my calling candle. So this is my calling candle. You should wait. It's given a first breakout, boom, from here. Don't enter on a first breakout. When it will come back and again making one small stop loss for you, and then it's giving a breakout, you can enter. So I'm currently, the time is, see, this laptop is still in Indian time zone. I'm not in India right now, so you see that 6:16 p.m. as per India. So if it is giving a breakout, you can check whether this breakout was successful or not in upcoming time. Okay, okay, okay. Now let me go back and I'll show you anything randomly. You just need to pick up and you just need to apply the rules. Mm, yep, here you see which one. This one is my calling candle. See this one. Now, as I told, see this one is calling candle. And in the calling candle, if there are multiple inside bars, you see that inside bars are there. Okay, though the calling candle is not an inside bar, but whenever inside bars are there, no, that is not a good trade, because inside bar is there, then some aggressive boom momentum I am expecting, not like this. sideways. But anyway, if I will trade this as my first close, came back, this will be my SL, and given second breakdown, came little bit up, given me 1 is to 1, boom, either cost to cost or it was an SL, right? Let me delete, let me delete this. Again, came back, again an entry, this was an stop loss, and yep, this was in stop loss and we got stopped out. I don't know whether we got stopped out or not. Let me check. Let me draw it properly, okay? So first, second, third. This was my third stop loss. Okay, let's see. It got hitted. Yeah, it got hitted. Okay, third stop loss also got hitted. And again, this fourth time, when it given a breakdown at this point, this was my stop loss, and you see this 90-degree fall you expected. But as I'm saying you every time, this small stop loss giving it's fine, because the big move, that's how you will able to capture. But first of all, when you see there is a inside bar, and this much of big sideways movement is going on, don't trade in such momentum. Why? Because they will just, it is just to trap you. Look for some other price action at that time. Like here you see there is a kind of price action formation, like kind of a trend line, and like here you see kind of a trend line, came back, given a breakdown, retest. So here it looks more better opportunity than this zigzag areas, right? So even on zigzag you got some profit and small losses, but when you use your brain, right, you will use your, the rules which is taught to you, you will always. And why I'm showing you this example, because this is a bad example. Here, you got a stop losses, that's why I'm showing you this. I can show you something where, there is this setup is setting very properly. No, that is not good. I have to show in the worst places, those setups. Then good places you will easily understand the setup. Okay, here is my setup. Again, this is an ascending triangle setup. So in ascending triangles you will not get a rebounds, right? And we got entry somewhere here, right? This is my buying candle. Now you see what happened. Market, here is my buying entry. This is a first time breakout, number one, and it came back, it's retest, it didn't came inside, retest, and again made a triangle. You see that, right? First of all, it's ascending triangle. Also on your horizontal line, as I told, if it make this kind of triangle formations, right, means whenever triangle comes, you don't expect, it should come back. Even this was one triangle saying it will not come, this was a triangle, it's saying it will not come back. Okay. Okay, I think my battery is finished while, telling you. See, okay. So, yep, you see that. So, whenever you see any kind of such situations, just enter. Just enter. This will be a stop loss. Just use your brain and enter. Don't waste that opportunities. Otherwise, if you want to, use your, that exact two-step rules, then you might not get this entry. That's obviously fine. I'm okay with that. Sometime you will not get. But why I'm teaching you this? So that you will not miss any such kind of opportunities. Okay, where is the, so that you will not move any miss any opportunities. Like I will show you something. RSR, RSR, or which one? There was one which I traded recently. LRC, there was some, I forgot the name. There was setup and I just took an entry. I forgot. Anyway, that's fine. Here is my calling candle. Inside big candle, I am getting this. That's I'm telling you. Inside big candle, if you're getting a call, inside big candle means this is not a good opportunity. You see that zigzag, zigzag, zigzag momentum, right? Nobody can hold this momentum. You'll get tired while holding and you will do mistakes, you know. Anyway, let's see if we just blindly followed the rule. First of all, this is saying just stay away from such opportunities. Look for more price action in these places. But still, let's say if somebody had followed, what might happen? First breakout came back. This will be my SL. Second breakdown, here I took entry, SL gone. Okay. Then you see SL gone every time. That's why, first of all, if you put some buffer like here above some point, you might be in this trade. Otherwise, this was an SLs. You might be in this trade and you will. So that's why I'm saying whenever you see any kind of inside bar kind of formation, what is your strategy? Look for, one second, look for this kind of things. Some sort of price action. Some sort of price action. Like here you see there is a move, breakdown, retest, and boom. Some sort of price actions you look for, right? So that's why I just made this, this notes to warn you. Whenever you see, either ignore this opportunity, or if you are experienced enough, look for some price action. If there is a 90-degree fall after the entry, came back and didn't went even inside and going back with some engulfing enter. There is a call came, again it came back on a trend line giving a breakout like this. It's coming back on some trend line, giving a breakdown, enter, right? Making some triangle over here, enter, right? It giving ascending triangle, enter. This triangle, enter. This is a general rule, right? If it's making flag and pole, enter. These are some aggressive moves you can expect, right? Its video is becoming too big, guys. Here you see this is my calling candle, and you see that on the calling candle, then it made this formation, calling candle and hammer. See, boom, down. Obviously, you didn't get entry, but you may use this as for reversal purpose. Um, let me see some other opportunities. Yep, here is one more. That this was a big opportunity. See here, just follow the rules. Simple. Here is a calling candle, breakout number one, came back, again giving a breakout. This will be a stop loss. You entered, came back down and hit at your stop loss. Now, third time when you are taking an entry, you are also seeing, right? This is a kind of triangle is being formed, right? So you can enter with, more confidence. And here you see it went up little bit, came and took the stop losses. So don't put exactly on the line, take some buffer always in stop loss, right? But this was a big move, mega move, actually. Yep. So I'm concluding this session over here with all those examples. You may take this screenshot all together or in batches. Ignore this. Okay. Ignore this. You can take screenshot. Enter on this. Enter on this. Enter on this. Don't wait for SL here. Means don't wait for double entry. And also don't wait for double entry here. Don't wait for double entry on those places. Okay. Here also double entry you might not get. It will just simply touch and go. Here also you might not get. Okay, so these are the use cases I just explained. Okay, proper explanation. maximum utilization of this indicator system, and I wish you all the best. Then thank you, and any query, just reach out to the team support@ktport.com.